Are managed futures right for your portfolio in 2013? For that matter, what are managed futures? Joining me to answer those questions is Bob Worthington. He's the president of Hatteras Funds. Welcome, Bob. Now, managed futures were off in 2012, just slightly, but before we get into their performance, let's talk about exactly what they are, because it's confusing to a lot of people.
Yeah. Managed futures are nothing more than systematically employed investment strategies that take advantage of price movements in futures contracts that relate to interest rates, commodities, currencies, and equity indices. And what those typically managed futures managers have their own models that they have developed over many years and decades that try and find trends, either long-term or short-term, that they can identify and then take advantage of in the marketplace and use contracts where they can go long or short these future contracts.
So the trend is your friend in managed futures, although last year as an asset class, it slightly underperformed its benchmarks. What happened in 2012?
2012 was a really interesting year in this fact that there was really not a lot of trends that came out of the marketplace there. I mean, if you look at it going into 2012, most people thought it'd be a very volatile year, and it wasn't at all. The VIX was at very much the lows, especially the second part of the year or the last two-thirds of the year. Volatility is the friend for managed futures also, and there was very little volatility. Now, if you look longer term, looking back, managed futures typically will underperform equities during a bull market. That's always happened, whether if you go back to the beginning of the century and you look at the two bull markets we've had, in those bull markets that lasted from 2002 to 2007 and then from 2009 until present, managed futures have really, I would say, underperformed or lagged during bull markets. But why people use them is during bear markets, the last two bear markets that have been very severe, 2000, 2002, and in 2008, managed futures actually produced very good positive returns. So over the long run, since the beginning of the century, managed futures indices have well outperformed the S&P 500.
And which trend do you think is going to be the most friendly in 2013? Maybe is it going to be the commodities section, the interest rate section, stocks? What's it going to be?
You know, managed futures is always difficult to predict the future, whereas where you have equity prices and valuations, and the same thing with fixed income, you know what the coupon is, you're trying to determine whether interest rates are going to go up or maybe spreads are going to go up and down. It's very hard to predict in the future exactly what trend where you could make money. We typically in our fund, the Hatteras Managed Futures Fund, have invested in managers that employ short-term trading strategies, and I'll tell you why we do that in a moment. But again, it's short-term in nature, so these strategies can change within weeks, and therefore it's difficult to predict. Now, one thing that people might talk about, this is more of a longer term, but certainly it could be the yen trade. The yen has bottomed. It looks like it's starting to depreciate. I think the new government there, together with the central bank, will probably employ policies that will continue that trend for the yen to weaken. There's a lot of long-term reasons why it should weaken. That could be a longer-term trend, for example, that people could play off of.
So finally, how do you choose the managers for your fund, and what makes your fund different from other managed futures funds out there?
Okay. First of all, in our fund, we have 4 underlying managed futures managers, and that's put together through a culmination of a lot of hard work on the part of our team, our portfolio managers, and our analysts to find really good small managed futures managers. Our philosophy in general is that small managed futures managers or hedge fund managers typically outperform the larger ones in the long run. So we have to do a lot of hard work finding smaller managers that might have a couple $100 million under management and making sure that they're world class. And then we put those together in the portfolio. How we're different is the fact, again, versus most managed futures funds out there today, they are long-term trend followers. We have employed a strategy where we're more short-term trend followers. And what that does is it actually brings down the correlation versus equities even more. For example, versus long-term trend followers, our short-term trend followers have produced a correlation of 0.42, which is very good. That's within the managed future space, and of course have very low correlation, if not negative correlation, to the equity market.
Thanks a lot, and thank you for watching The Street.